Morning, Cactus Cake. Gonna have a look at these charts. Let's have a look at Bitcoin. Morning. Okay. Basically, what happened was that I didn't trade yesterday at all. Just had a busy day. And so I'm just gonna have a look and see what happened because I wasn't really paying attention to the charts yesterday. I know it went up and I know it went down. I know I had some trades. I know my alerts went off, but because I wasn't focused on the trading, I didn't really look at it. Oh, that's all my interesting. Right, so there you go. Look at that one. That was the actual one that worked. After all of that, this was almost the correct one. Look. After all of that. It didn't go straight up. It went down and then up. So that was the cipher. Right? So we know what we have now, right? Because that was the idea. The cipher. Pretty much. And so our next target is going to be, that's it, that's the trade, we got it. That was easy. The work done. We've already done the work. Move this across a little bit. What do you think? I don't really have anything else to say. We had one already planned. It just, you know, it's a lot easier to see once it happens. But I think this is still good. Don't know where my other drawings went. Okay, that doesn't matter. So I had a Gartley idea for yesterday, but it came too quickly. And yeah, I was thinking about I don't know what I was thinking. I was thinking about something like that, but it kind of came up too quickly. So I didn't, it wasn't good. I wasn't sure about that. I don't really have anything else to say actually, looking at Bitcoin. Let me have a look at the daily charts. Yeah, I mean, look, that looks really, initially that looks really bearish, but the daily candle hasn't formed yet. So we just have to see how it plays out. Yesterday's candle, it was actually quite good considering that it closed all the way up there. It doesn't look good now, but I think the only issue of yesterday's candle was that it took the liquidity. And then also when I was looking at the EXO charts, the move down wasn't a strong move down. So I wasn't having a look. When the price went up, I didn't really see any liquidations, which was quite weird. You see that? I was expecting, because there was a lot of shorts here, and so I was expecting more liquidations, but maybe they happened earlier, I'm not sure. But it was very weird that we didn't see a big liquidation bubble in the high of this range. Very weird. I thought that was very weird. And then also in the bottom of this range, these lows, we didn't see any liquidation bubbles. It was quite odd. And then as the price came down yesterday, first as the price went up, you could see that there was shorts closing, 15 million. shorts closing, shorts and longs opening there, and then you had some longs opening and then longs closing, and then these were like closing longs. This kind of drop down was longs closing. Then you had some shorts entering here. So once the longs closed and there was an SFP, shorts started to enter. And this is just all longs closing, really. All of this down move, it looks like lots of longs closing. And this is where shorts started to enter again as the price started to dip. You see that? Open interest increasing 4.8 million. These are shorts entering. And it's the same as what normally happens. Shorts usually come into the lows and then they get trapped again. And it's the same in the highs. Longs usually come into the highs and then they get trapped. And then this move up, that's a long entering after a short gets liquidated. And the reason why the short gets liquidated is because another short closed. These are longs closing. And then this downward move. These are all longs closing, all of these. And then what's this big one here? That's a short opening there, 8.9 million. There's some shorts opening here. So there are some shorts opening in this range. Look, these are all shorts, short, short, short. There's some shorting going on, and these are some longs closing, which is pulling the price down now. So we have some shorts in this recent price action, and we have longs closing. We're back at the PD value area low of the previous range. Can I see any divergences? Yeah, again, we've got some bullish on this drop here. It's a bit of bullish divergences again, bit of absorption. It's just interesting because what we're seeing is absorption across the whole range, just generally. David saying that I think if we get down into the 49k, we'll get very bearish. Look for heavy shorting and then counter it when they get trapped. So I still kind of, I still think we should have a look at this possibility, which was this is it that one? So it was that one. That was the cipher. Where's my images? Actually, let me bring it. It's a bit, timing's a bit lopsided. I don't know. Or is it more of a sharp? And then this would be like that. I don't know. Basically, according to these two, cipher or shark. That's the cipher. These are parallel, huh? So if these are parallel, Yeah. That's the cipher. The shark is a little bit more aggressive in the drop. It's a lot more aggressive and it comes down below the X. Any thoughts? Anyone? Have a look at the 12-hour candles. Get rid of these now. Right, it's fine. Get rid of that now. The channel, let's put it in the cycle. Right. For all intents purposes, I would say that yesterday's candle, the 12-hour one was, sorry, the last 12-hour candle was bearish. And you would expect this kind of drop after this kind of candle. It's a kind of like a midpoint of a reversal candle pattern. This doji, what is that? A dragonfly doji in the highs, takes the liquidity from the high of the range and all of these previous candles. That's a pretty bearish 12-hour candle, this one that was printed. Closing underneath the value area high. Yeah, that was an easy, I didn't catch it, but there's no way that you would have, especially in the context of 12 hours ago, which is the end of the day, there's no way you're expecting the price to go up after you print this kind of candle. And the price action doesn't support this continuation because you're just not seeing longs, shorts either close or longs open. And after you take the liquidity from the high there and print this type of candle underneath the value area high, dragonfly in the highs, it's good to like evaluate these types of candles because they do happen a lot. And so the more that we analyze the why of this candle, then in the future when it comes around again, it'll be a lot easier to spot as it's printing and the why of why this candle was such a bearish candle. So you take the liquidity from the high, you close underneath the value area high. The timing of the candle printing, it's at the end of the day when it closes. It's not at noon, it's at midnight. It's got good volume, increasing volume. Yeah, there's a lot of reasons why that was a bearish candle. And next time you'll know to short the candle. Like you can literally just short that candle. That's a viable trade in itself. So the next time it presents itself, it's a good kind of idea to have in your mind. Well, look, if you look at a candle, can you short a candle? Well, that would have just the shorting the candle with that kind of entry, and you're already, it's like a 1 to 1.4 trade. Just the candle, just the screen candle here. And that's just the candle. You can hone it in your entry next time. It's good to have a look at these things. And then the other thing that I was looking at, So this might be a change. We have to see. So we haven't had a 12-hour close underneath this line. So what would get people bearish now is if we close underneath this line. So this is like our 12-hour candle support line. And then the next 12 hours, you print a candle, you don't come back up. You just stay here. Just back test it for continuation or just stay here. I think a lot of people will get really bearish then. Maybe that's what we need. We need something to get people really bearish. I don't. What's this price action now? Let me have a look. It's a big drop suddenly. There's some shorts opening the last 10 minutes. That's shorts opening and the shorts opening. And 20 minutes ago, shorts opening. So you got some shorts now coming in to these. Well, now that we've lost this range, potentially. We have some shorts coming in. Let's have a look. Area, yeah, you see that? So now that we've kind of lost this low here, shorts are starting to enter, and naturally they have a really, when you cross these kind of significant lines, you have really easy invalidations, because then if the price does come back up here and closes back into the range, you're invalidated. So you don't necessarily even need like to set a hard stop. You have a hard stop higher up to protect yourself against some kind of crazy black swan event. But then as soon as you see the price come back up, then you'll be like, okay, no, actually it's not going down. I'm easily invalidated. And I think the people who are trading this aren't thinking that the price is coming back up, and so you've lost this previous low and this key level that I've marked. So it would be easy to see if we get back up. It'd be very easy to see that. So at the moment, I'm still thinking I'm not going to short because we're in the low of the range. Unless, let me think. I'm still preferring a long, but again, I think you have to have a planned trade, so we have to see what happens. I'm still thinking this. And I think the reason why I'm still bullish is because there's still quite a large amount of upward momentum in this market. And I haven't actually seen it come out of the market yet to make me think that all of a sudden we're going to see some kind of change in the way the price moves. So if you look at like the lower time frames, see, look, this is the 4-hour 50 moving average is there, and you've got like the 6-hour moving average, and it hasn't, this 6-hour 50 moving average hasn't even been touched. For the first time it was touched when the price came back, and you see it was kind of holding support there. So I wouldn't expect the price to not react another time, and that might coincide with taking these lows. I wouldn't expect the price to not react. It would be very weird for the price to suddenly just ignore that, these kind of higher time, these kind, not higher time frame, but like mid time frame to low time frame moving averages. And if you look at all of the moving averages, you see how the price always reacts. So I'm not going to get crazy bearish because I still see quite a large amount of momentum in this market. And then the other thing that kind of makes me still kind of bullish is that I'm seeing a lot of absorption in the price. And so when I look at these, when I see like this MACD, see how the price is really moving down, and yet we've made a higher low here. So you can clearly see hidden bullish divergences with the MACD and the behavior of the price. And so it's not easy to time. It's not easy to time the actual kind of moment that this consolidation range is over. And so that's why you just have to keep on thinking about trading the range and looking for longs at the lows and looking for shorts at the highs, and then until eventually it will decide what it wants to do. I also see, look, see on the CCI here, we have see this lower low here, and we're still in a higher low situation here. So there is a bit of divergences, hidden bullish divergences showing on both these indicators. Anything else? And what's interesting about the MACD is, like, even on the higher range that you look at it, you see these lows here, we're almost back at the lows here. And if you correspond that to the price, you'll see that those lows were over here. And so even though the MACD is pretty much, I mean, if the price was following the MACD, then the price should be here. See, the MACD's come all the way down to here. And so because the MACD is still up here, then the price is still up here. Realistically, the MACD should be up there. Because the MACD is going down, then you're getting a large amount of absorption in the price. So you get a lot of absorption. So whoever is selling is being bought basically by limit longs. They're just absorbing the price at these levels. That's kind of what I'm seeing right now in the charts. Today's long. I'm definitely going to take it. I don't care because I didn't trade yesterday and it was annoying. So let me just get my trade plan open. Let me make sure I have an alert on this swing failure. SFB long BTC. There you go. And let's see, once we get a swing failure, just take it, just do it. And then if I think the secret is this, and actually this could be a bit more like that. No. And this actually, could that be Gartley? No. It would have to be more like this. If it's a Gartley, hold on. Nah. It'd be more like a shark. Cypher's my favorite. I think Cypher's my favorite, but these aren't parallel. These aren't parallel, that's the only thing. So maybe it is a Gartley, because they're not parallel. Oh, crap. Well, anyway, we're looking at something bullish here. Yeah, you can clearly see that something forming bullish because you have this C that's taken the A. You've got this kind of V shape here now, which is what we're looking at. There's like a V shape in all of these bullish kind of harmonics. So we're looking at a V shape in the highs where the C has taken the A. And so effectively we're looking at either some sort of shark, Gartley, or cipher. And it all depends on where the last point ends to see what kind of formation, where this harmonic forms the last point. But ultimately, in terms of taking the trade, unless it's a shark, and the problem with a shark is that this goes much deeper. Okay, so it comes underneath this pivot X. And so the two trades really in question are if the price manages to get past the B here, then the safe way to enter is the swing failure of B. And then you have your invalidation back underneath the D. Yeah, or where the price action gives you a smaller invalidation, right? If for some reason you don't get that swing failure, then you're basically looking for lower, and then you're looking for something a little bit more extended, and it can only be basically one of the ones, basically a shark or a cipher, really. It can't even be a Gartley. So either one of this or this, and actually possibly, yeah, I can't tell. I think the point is that we don't get bearish. We're still bullish because we're looking at some kind of bullish harmonic, and we are, if the price drops, it's dropping into strong upward momentum, and we're coming into liquidity levels. And then the other thing that I was saying the other day is if we wanted to create some kind of targets, then you can do this full fib extension. Hold on, let me just delete those lines now. That's fine. Get rid of these moving averages now. Pull it up to there. Right. And then what we can do is we can do like an extension. Let's just do an extension. So I think here really, there. We can get to there. Doesn't really matter exactly where. Let's see if we can get, I think that would be good, an entry somewhere there. But then obviously I think the swing failure is the one that'll be the safe one to take. And then if you get like a bounce back test and then comes back, you'll have a much shorter invalidation. And then the target will be, you know, like the first take profit will be back into the value area low, because you'll be expecting the price to resist in the first instance. And then obviously the runner, you'll be trying to get to the highs again. And I think possibly we could be in a situation where we are just forming these kind of bullish to bearish to bullish to bearish harmonics for a while. So we have to keep an eye out for these, right? Any questions? No. See that 3-day candle? Yeah, it's not great, is it? That was not great. 3-day close yesterday wasn't a great candle. Mm, 2 weeks still hasn't formed yet. Okay. Okay. Let me move on to the next thing. This is still just going, consolidating in this, what could be a diamond. ETH is just following BTC really. See, altcoins are pulling back a little bit. This is the total market cap excluding the top 10. And so basically the rest of the altcoins, shitcoins. And you can see that there's a previous high there. And we're back underneath it on the daily time frame. So that's pretty bearish, this candle formation here. These last 2 days, this last one, it's not Dragonfly Doji, what is that? Is that a Dragonfly Doji? There. Yeah. It's like a hammer in the highs, but it has a wick on top. It's pretty bearish. It would be more bearish if it took the liquidity from the top of that candle. But the good thing about when you come underneath these previous highs is that you have a very easy line to see if you see a reversal. And so naturally, if the price does come back up, hold it as support, then it will basically be the same line. It's very easy to see how the price moves around these previous highs to see if you can see weakness or if you can see a return of strength in the price action. And the good thing about these like easy lines to see is that now like you can't trade this obviously, but you have a very easy invalidation, because just for the sake of example, if you wanted to take a trade, you could say, well, you know, you have an easy invalidation right back above that line. And the good thing about it is it's in the highs, so this potentially could go down quite far. Anyway, it's just something to be interested in. They all did it. Let me see this one. See, they all did it, but this one was weaker. They all have that same idea. There. This one was much higher. I see the total market cap. Yeah, so we are forming a little bit of a topping, potentially a topping pattern. It's still not there yet, but we are potentially forming like a head and shoulders here. it'll be even more bearish. It'll be really bearish if it does that. If we take this low and then we just come up to sell off into the golden pocket here. So let's keep an eye on that. That's the total market cap of crypto. I'm just wondering if BTC is doing exactly the same thing. We're getting the same kind of behavior here. And then one more. Well, let's keep an eye on it. And then the way to see, so for the trade that we're going to take, if we do come down, then really our target is going to be the golden pocket, just in case this now comes down and does that. All right. And then you could be forming some kind of bearish harmonic afterwards. So that could get people bearish at the lows. You do form some kind of, if you were to form something like that, then this could be some kind of another, like a bearish harmonic, where you get everyone really bearish to go up. You know, that's something like that could happen, where you form a bullish harmonic, get people bearish to go up, to get people bullish to go down, to get people bearish to go up all the way back up to the highs, and forming some kind of butterfly, bearish butterfly. So just bear this in mind. This we could be getting something like this in this range, where it just basically destroys everyone, literally destroying everyone. Everyone is expecting a breakdown and it doesn't break down. Everyone is expecting a break up and it doesn't break up, and we just end up hurting everyone. And so the best way to do this is just to try and take the swing failures into the edges of the range, especially if you see some kind of harmonic forming. I'll keep that just in case. Let's see. Any questions? So that's Bitcoin. Single prints, huh? Let me have a look. Look at the let me have a look at this. Well, we have a buying tail, which we're into now. Where are the single prints? Here. So actually, what I can see is the low of these single prints weren't filled. So we could probably come to the low here. 49945. Let me just mark that off. 49945. That's quite lower. You were saying you were thinking it could come down to fill this candle. Oh, that lines up. So that lines up with the 1.272 of the extension from this pivot to this high. from this pivot low to this high, that 1.272 lines up with the single prints here. So that's the second confluence that we have on that potential long. This single prints here, and then let me just do a range ball and see. There you go. It's to the underside of the golden pocket, the 6-6, from this pivot to that pivot. So we have pretty good confluence there for entry at the D if we come down into that price at about basically 50,000, just below it. Right? And the safe entry is the swing failure of B. You'd still get a good trade off that. But if you want to enter, so I think this, if you want to enter lower, the strategy will be, I think, let me have a look. Well, look, there's a really nice alignment of these lines here. You see that? You've got the 1.272, you've got the edge of the golden pocket, and then you've got these single prints. They all kind of come in exactly the same place. If you get a little bit of a reaction there, just take it. Let's see what happens. It's worth it. And maybe what you're gonna get maybe what you'll get, obviously you might come down and it might go down like that. You know, it might get the kind of, let's kill everyone, let's destroy everyone in these lows, push, you know. So just bear that in mind. But actually the entry is here, right on the single prints. I did use the TPO. David is saying use the TPO template. Did. Look. That's TPO. So they're here. Look. And we have single prints lower down as well. See, look, SP. And then there's a gap, and then we have single prints lower down as well. No, that's buy. That's a buying tail. That's not single prints. So actually, your single print ends at 49945. Any more? No, they're much lower. I can't see any more confluence. Well, look, you've also got this, your previous week value area low coming at 49929. 49929. All right. So if I get rid of these, 49929. Where did it go? Where is it? Missed it. Down. So that's exactly on the golden pocket. I think we've got quite a lot of confluence there, and we take this range, it's not big range. That's also the point of control of this previous range. That's the entry really. That line there. All right. So let's see. Let's keep that line in mind. See if we can long it. And let's take it back up to the golden pocket, which would be much higher actually. And then let's see if we can create another harmonic. Then we'd need to trade this point. And so the new harmonic is there to there to there to there to there. Yeah, if we do that, that would be better. We can actually, if it does get down to that point, we take it, that would be better. And trade up to the golden pocket for a short down to, let's see, I mean, you never know. Could happen. Who knows? It's been crazy, yeah, the price action. So just go down and just go up again. It's weird like that. All right, I think I'm done with this analysis now. I still think we're forming something here. If I get I mean, if people aren't sure about taking trades, don't take it. Just do a paper trade or use a much smaller amount and scale in, ladder in. Risk a smaller amount to begin with. Then if it starts going in your direction, you can start adding, you know. So you're initially starting with a very small invalidation because you're risking less. And then if it starts going in your direction, you can start buying the mini dips. You know, you don't have to just go crazy and go, this is going to work, because you just don't know. No one knows what's going to happen. I might have an idea. It might not work. And that's really what it comes down to, trading. It's about having an idea, whether it's this or something else, risking a percentage, knowing that full well that you can lose your percentage. It's just the way it is. You have to accept that risk to begin with. And if it works, as soon as you get into your take profit, you take profit. And that's really it. That's really how to do it. And because you're only trading a small percentage of your balance, you're not fussed, you're not worried, because you're trading as long as you have an invalidation when you take the trade, so you know that you're wrong. And you could be right, you could be wrong. That's just the way it is. Cactus Cake says, seems like a slight correction is... I hate this window because it doesn't I have to pop it out. It's a little heart in front of the chat. I can't see. Seems like a slight correction is coming the back up. What do you mean? Seems like a slight correction is coming the back up. I don't quite understand. Do you look at RSI? I used to look at it, but I only find that the RSI useful for I think I get all the information from the RSI in the CCI. I think the CCI is a combination of many indicators, like 3 indicators in one. So I think I get the similar ideas from the CCI. Let me have a look at the RSI. It's kind of, I don't know, I kind of get the feeling that it's similar, CCI and RSI. If you look at it, see that? Very similar. So you've got this second line on the RSI where you can see crossovers. I don't know if people use that, but I think I get that in the MACD, those crossovers. You see where it crosses over here and here. So I'm basically getting all the information in the CCI and the MACD. So maybe people will just prefer one indicator to do that, but I like to keep them separate because it's a lot easier to see. Kind of, I feel like they're kind of all saying, they say the same thing. Correct me if I'm wrong. I don't think it's wrong to use any indicator. Like I think it's, when you hear traders say that this is the, never use that, that's for noobs, that's for beginners, this is, pro traders don't do that, it's rubbish. I think anyone can develop a trading technique and strategy based on anything that's available. Like, and people do, people successfully trade. I've seen people trade not using any indicators. You know, I've seen people trade using a ton of indicators, and they're all successful traders. I think it's just what works for you. But ultimately, when it comes to indicators or any kind of candles or whatever, it's becoming the master that matters in that tool. That's what really matters. Let me have a look at Sol. And I'm not saying I'm a master either. I'm not suggesting that. We're always learning. And everyone is always learning. I can't remember what I said the other day. Let me see what I wrote down. I wanted to go down here before I take a long. I'm looking for this. All right. Sol and BTC are connected. So maybe have the BTC chart. I think on the BTC chart, we're coming into a major time pivot soon in April. And it's consolidating. I think look at the BTC chart when you're looking at Sol, because I think that matters more than the USD chart, because all of a sudden if the BTC chart pumps, the USD chart will pump, because you have enough volume coming in from BTC to make the USD chart pump. So probably what you really want to be doing is focusing on the BTC chart, or at least putting them together. So kind of we've lost this value area low now, and I think it's easy to see strength return, because the first sign of strength is going to be getting back into that value area low. those trades are quite easy, and then they're very easy because you have if it does come back into the value area low, you have a really easy invalidation. You have the low that the pivots that's just been made underneath the value area low. These are really easy trades, and if you see how the price comes into the value area high, it's the same thing. You have easy, you always have easy trades if you get that kind of behavior when the pivot's been put in, because now you're expecting it to go in the other direction. And the key to trading the edges is just having an invalidation, knowing where the invalidation is after the pivot's been put in. Yeah, and even if you catch it a little bit later, you still catch most of the trade, assuming your trade doesn't get invalidated. Yeah, so for this, it doesn't look like it's breaking down yet. Not yet. Got a little bit of I think you're going to find a little bit of support on the back of this range here, which kind of lines up here. A little bit of support there. So it may be that we just go down, you know, to do that on the Bitcoin chart. And I think a real kind of higher time frame sign of weakness potentially will be some kind of I mean, I don't know if I want to see a weekly close underneath this low here, to be honest with you. But that's a weekly time frame. I don't know if that's going to look good, and it might just mean that it just drops into this lower part. But again, what can happen with Sol, and again, it depends on Bitcoin, is that you get like one candle down, and then the next one is just brought right back up to like this. You see how this happened? This red candle, it was like a bear trap. It closed underneath these lows, so that's bearish. And you see how it just was brought right back up against Bitcoin. And so that's the problem with Solana, that it's so bullish that if you get any kind of strength return to Bitcoin, it will just get brought right back up straight away. You've seen that happen before. So usually I would think close underneath a previous low is bullish, bearish, but we've seen here clearly that it can easily reverse. You've got to be careful of that. That's the problem. Let me have another look though. So that's a pretty kind of potentially that's a bearish monthly candle. I think if this month, I mean, we're far away from it yet, like a week. But if we get a month close above the previous month low, above, then I think that's quite good. And if it's below, then that's not good. And we just have to see how that kind of... But I do think here, like you see how we have... look at these, look at these. I mean, I think that's a really important line. Like on the monthly time frame, that's like an SR flip. And I don't even know if it's going to go down that low, because we're also potentially at one up here, slightly higher up. on the monthly time frame. You see that? We're potentially at an SR flip now. And then if we don't hold this SR flip, then we potentially have a much more significant higher time SR flip lower down. So whether the price does go down, test it just to come back up. That's what I'm thinking. Like if we do go down further, just to get a little back test, feel the volume gap here, price to push right back up and close above the previous month low by the end of the month. So then this whole structure here, it wouldn't actually be bearish. It would just be consolidation with the next month potentially going up to form a green candle. That's kind of what I'm imagining on the higher time frame right now. If we push down lower, and this is against Bitcoin. So I think there is a bit of resistance underneath us here. And we're not far away from it. On Bitcoin, we're down. It's only like 10% away. And then if you look at this chart, let me have a look at something else as well. What I've seen people do just to trade Solana is they trade Bitcoin but using Solana. So what they'll do is they just wait for Bitcoin to get into support or to show some kind of reversal. And then instead of longing Bitcoin, they long Solana. And then the Solana invalidation is based on Bitcoin invalidations. And so these aren't hard invalidations, they're mental invalidations. So when they start seeing Bitcoin invalidate in a Bitcoin type trade, then they'll close their Solana trade. And so they'll basically, it's kind of leveraging Bitcoin without using leverage by trading Bitcoin by buying and selling Solana, because you're going to get more crazier, more volatile behavior on Solana. So I think it's quite important, the Bitcoin chart, but don't know. Just think it's ranging, really. Let me look at the market cap. It's quite a dropper, 10 billion market cap to this pivot low. I think you would take that, huh? If you lost 10 billion in Solana, you would take that. Because that's like 10 billion value out of the market. I think that's a really good pivot to take. And take that pivot. It looks kind of like Bitcoin actually, when you harmonics wise, like what we're doing on Bitcoin and analyzing Bitcoin, you're getting something very, I don't know, you're getting very something similar, except you've got a lower high here. Very similar, potentially. The thing about Solana also is you've got pretty strong moving averages. Like the momentum is really strong. And so here, look, you see the 50-day moving average for the market cap is flat, but it's at 43 billion now. And then if you go to the higher time frames, You see how strong the momentum is now on the 3-day chart, and potentially we've only just begun. Potentially, if you look at the previous price action and how the 3-day 50 moving average behaved, and how the price reacted, so I think you just have to go with the momentum and just try and look for longing the big dips if they present themselves. And if you're going to scale in, you can just scale in. And if you want to trade it, then you need to look for an invalidation first. So that's the key. So you can always scale in, dollar cost average in to the dips. But I mean, any kind of, it's the easiest trades for trading is just the swing failures of the lows, and then take profit as quickly as possible and increase your portfolio. That would be relatively easy. And this is the this is the dollar chart. Yeah, I think the back test of this golden pocket should hold. If it goes down, it should hold. I think it should hold. If we do get like some kind of crazy breakdown, then we've got some significant levels lower down. Like we've got a previous range value area low, and then we've got this value area high levels. And then if we get this, I'm taking that trade. That's like that's what I'm imagining for the best entry, all the way down to $30. That's what I'm dreaming of. That's not going to happen. Realistically, it's not going to happen. But you never know, right? And so the other thing to bear in mind is, like, people will look at this idea that I have and go, you're mad. That's never going to happen. It's not the point. The point is that if it does happen, then I know what to expect and where to take the trade and what my invalidation will be. And the reason why I'm taking the trade, because of the analysis that I've made and the higher time frame levels that I'm interested in taking the trade. As long as you have an invalidation, it doesn't really matter where you enter, as long as your trade has an invalidation, and that's the only difference here, that if I was to take it, I'd be looking more of a swing trade idea, because you're coming to a higher level area where you would expect the price to hold and then turn. But the price doesn't have to do that. And it doesn't mean I'm wrong that I had a plan for that. It just means that I had a plan. Okay, but I'm not predicting the future. I'm just saying that if that presented itself, I would know what to do, because I had a plan for that future that presented itself. So in terms of the targets, Cactus is asking about the targets, okay? And what you want to do is a few things. So firstly, I've got this Elliott wave count, which I'm just kind of keeping in mind. And I don't know why, but I've got 2 fib targets. I understand. Trend based time. Okay. So should like that one better. Let's see the other one. This one. Okay, there's a few things going on here. Let me explain. So we have our 5 waves from the previous bull market. You have your 1, a deep 2, you have your 3 to this pivot, actually not to the high. Then you have a weird ABC here for a week 5. So I'm imagining that the whole one of the first bull market started here and ended actually here. Didn't end in these highs. I'm imagining it ended here. And the reason why I'm imagining it ended here was because of the structure of the Elliott waves. I can see how the price came down here and it's like a back test. And then you had a 5. And that's not the only thing. I'm also thinking of the time as well. So the way I did it was I created a fib time from the 0 to what did I do actually? I can't remember. Oh, actually that 3 is up there. Sorry. So I did the fib time. Fib times are like areas. They're not exact. But I like the fact that the 618 landed in the lows here. That's all. Yeah. So if I'm imagining it to from the 0 to the 3 to the 4. Yeah. And even though the 4 is subjective, I'm just going at the first kind of possible drop. It's a range. And so what I like is I like 2 things. I like that the low of the fib time, the 618 landed here on the 618. And I like that the 1 was here and this like this pivot high. So I can see some kind of rhythm in the way it moves. So that gives me a little bit of confidence about this fib. Sorry, this Elliott waves 1, 2, 3, 4, 5. Anyway, that's by the by. Let me just go back to what I was saying. So when you have that idea, let me close it now. Get rid of some lines so you can see. So there's different ways of doing it, but if you do a fib extension, you would do a fib extension from the high here to the low here. And that will give you these targets. And then also if you do a trend-based fib extension, so the trend-based fib extension is, again, it's on the 0. Now I'm doing it from the 0 to the 1. And so this whole thing is a 1 and then down to the 2. So on the higher time frame. And that's how I'm doing a trend-based fib extension. And then that gives me really nice confluence on this 786 at 699. Because now I've got 2 matching lines on this level. I've got this 1.272 extension, which is coming at 695, and I have a trend-based fib extension, which is the 786 coming at 699. So it's really nice where you do fibs on different kind of structures of the move, and then you get fib levels which kind of perfectly line up. And then so actually what I'm thinking is that that's going to be quite a strong extended level whenever we get there, this one here. So just that's something to bear in mind on the way up. And then it all depends on Bitcoin, really. Depends. I think what you have to think about is, does Bitcoin go up to 80K? Does it go up to 100K? Does it go up to 120K? Does it go up to 150K? Does it go up to more? And if Bitcoin does more, then I wouldn't be surprised if all of the altcoins do more, and probably much more, because there'll be a lot more capital for the capital rotation that follows. And like some of these coins, like Solana now is on $45 billion. So a 10x is going to take us to $450 billion. It's going to take us to $1,146. That's like a 10x almost. And you really need Bitcoin to have a large market cap and the whole crypto market cap to be quite large for Solana to pump to such a large high amount. Yeah. And that basically also require ETH to pump hard as well. So there's a lot of things that have to happen for Solana to get to these higher prices. So for sure, a major take profit is going to be this 618 trend-based fib extension. That comes perfectly to the previous all-time high, to the all-time high. So that's going to be the first significant level of resistance. And depending on when we get there, if you get there when I've got this higher time frame channel, time is really important. So if you get there like there, then you've got a really strong confluence, because you've got the previous all-time high, you have a higher time frame fib level, and then you have the idea of a mid-channel as well, and maybe some other things going on as well. And so you can't imagine higher prices until you clear lower levels. And I think it's easy to, like, for me to say, well, look, these are all targets just because they're fib levels. So even now, if I look at this this extension, the 1.618 is coming at 2,300. That's really extended. That's really extended. So actually, I'm thinking lower. I'm actually thinking $700, which is what you said, $700. Yeah, I think $700. $700. Who knows? But that would make sense, though, because it's only a 6x. 6 times 45. Is that $270 billion? If the crypto market cap gets to potentially $7 trillion, or at the lowest, the lowest level that I've got marked on the total crypto market cap is $4.4 trillion. That's the next kind of past the all-time high. That's my next level of serious fib resistance. I don't see why Solana can't extract $270 billion of that value in one go with all of the rotations that happen. And so you're basically, for a short period of time, what I would imagine is you're going to get a crazy rally where everything is diverted to Solana. So the ETH capital, the BTC capital, the BNB capital, every capital is just going to, for a short period of time, it's just going to focus. And then, yeah, $700. Let's go. I don't see why not, really. I don't see why it can't happen. But I don't think it's going to happen until Bitcoin clears its all-time high and holds the all-time high as support. Yeah. Anyway, I don't really have anything more to say. I've got these figures in mind, and then we'll just see what happens. I don't have any Solana. I'm actually looking for a big dip, but it's not coming. So I'd rather wait And the reason why you wait for dips is because I want people to take their profits. I'm not going to be buying Solana when people haven't taken profits yet. So I'm very conscious about people taking profit when it comes to trading. I just want to see people take profit. I don't want to take a trade if it's long or short if I haven't seen people take profit, because what happens is you take the trade and then immediately you're underwater because someone who had a bigger position, much bigger position, sold that market, and then you're immediately underwater. I'd rather see that happen and then take the trade, because at least now I don't have to worry about these take profits. But yeah, this isn't, don't know, look, it did back test the golden pocket. Yeah. It actually came up higher. Right into, we're now underneath the golden pocket. So what you could, so there's many things that can form with Solana. If this is a range, you could be forming anything. You could be forming a triangle. You know, that could happen. You could be forming a higher time frame flag. You know, you could be forming that. Could be forming let me see what else. Triangle flag. Could be forming a head and shoulders, inverse head and shoulders, or maybe a 3-wave, maybe something like that. I don't know. There's so many things that can form. This is the lower. Let's go up. I do think the likely outcome is up, though. Do you know? Because I can see that this is, and then what you have also is you got this, see, the slight things. So that would be nice. It would be nice to actually take this pivot low and swing failure and just go up. That would be, it's probably the easiest trade here for a long. Gonna be the easiest trade. And target the golden pocket. The new golden pocket would probably be like that. And I think that is, what is that? That's like an A, B, C, D, isn't it? That is it. It's kind of like that. It's kind of what you're trading. Right? And see what happens. And if it, the great thing about creating a plan is that you have an idea of what you want to see. With a swing failure, you can take that trade, because now you have a completed harmonic with a swing failure pattern, invalidation. You have a really nice trade there, and that's basically a 1. You're risking 1 to 3. That's with a larger invalidation. But if it comes back up, swing failures, and kind of form support, you could probably catch it while it's going up and have a much smaller invalidation and have a much better risk to reward trade. You take your profit early. You take enough profit early so that if the trade does not work out the way you think it could, and does this, that you've already taken your profit early, and then this trade becomes a risk-free trade. The key to making every trade a successful trade is, as soon as you can, take enough profit so that if you get invalidated, you still make money. And so every trade becomes risk-free. And then all you need to do when you take a trade is just find the right conditions for taking trades, and it's always begins with having an invalidation first. So you need the invalidation before you take a trade. You need to know when you're wrong. And so when you do, that's why swing failures are so easy, because it's an easy invalidation. Because if you do swing failure a pivot like that and you take the trade, if it does go down and that's your invalidation, then you're wrong, and that's fine. So Cactus Cake says, thanks for looking at it. How about just buy and stake it to earn 7.5% on Solana? I think for most people, that's the best strategy. And I think the best strategy is going to be dollar cost averaging in and then staking it for the duration of the bull market. And most people don't know how to dollar cost average. The key to dollar cost averaging is to buying exactly the same amount at exactly the same period. And the period doesn't have to be a time period. It can be any kind of period that's activated by a trigger. So if your period could be red weekly candles on the higher time frame, it could be a period. And then you can, if you buy the same amount, then you're scaling in. And then if you stake that, then your Cactus Cake is absolutely correct. You can just be earning interest on your investment for the duration of the bull market, but you mustn't be phased by the swings, the crazy volatility. And the only way to overcome that is to be regularly buying, constantly buying. So you're averaging into the lows. So eventually what happens is the price comes down and then it comes back up. And because you're just continuously buying at the same amount, eventually your average position will be an average of the lows, but you still have to keep on buying. Even if price goes up, you're buying, you're always buying, and you end up with an average, which will be an average of the lows. And then eventually, with the compounding, with the interest that you're earning, eventually what you'll do is in the future, when we reach higher targets, and I think 700 for me would be a really amazing target for Solana, then you can just take all your profit, basically take 90% or more of your profit and just walk away a happy person. So I've seen super trend. I don't really need to use it because I can see the trend. I think super trend is good for people who can't see the trend. So they need that extra confirmation. There's lots of super trends. That's not the right one. There's so many variations of the super trend. I don't know which one is the best one. Look, super trend, super trend, super trend. The best super trend. CCI, let's have a look. There you go. Apparently this is the best. I don't know. Most people who don't know the trends will need to use the super trend. I've got some so in the last bull market I got if you know Crypto Tony, I got his I bought his package because I was curious. He was super trend EMA 200. Oh my god, look at that. It's too much. I can't do this. long panel, price above, long, 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 long. Short panel, price below, short, 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 short. I don't know. The most important thing with trading is just to be consistent. So if you do use one of these indicators and you have these kind of signals for entering and exit, you have to have the same consistent approach to risk position sizing. You have to have exactly the same conditions for when you enter and exit trades. You have to keep those very constant, and then you need to definitely record your trades to make sure you know if you're winning or if you're losing, because otherwise you won't know if you're winning or you're losing. You can't tell. And so that's really important. So consistency is the approach when you're using something like this. Otherwise you definitely won't succeed. Like, you have to be consistent. Cactus is saying it's the wrong one. Right. How about this one? Scripts. Afterburn, is that the one? Let me try this. Yeah, I tried to, I couldn't figure this out either, to be honest with you. This is Crypto's Tony's Afterburn. Can't figure it out. Look, could you trade with that? This is the weekly time frame though. Let me go to the Does that make any sense to you? Can you figure it out? It'll take too long. I was saying this one now. Okay, that looks nicer. That's very nice. I like that. See, you want something very clear to understand, but I'm guessing what this is saying is as long as you're green, you can buy, and then as soon as you come underneath here, then you're into selling mode. So if you're underneath, you're selling, and if you're above, you're buying. And in the context of a bull market, you're just buying. You just wait for it to flip. So the best indicator will be for it to go red and then for it to flip green. And once it's green, you can just start crazy buying. And then in the bear market, it's the reverse. So as soon as it flips red, you go crazy sell. And then when it's ranging, you almost have to do completely the opposite. You when it's red, you have to be buying, and when it's green, you have to be selling. So you have to do the opposite. So right now we're in a bull market. So the next kind of crazy big opportunity, if it presents itself, would be to wait for it to flip red, and then as soon as it flips green, buy like there's no tomorrow. And you have that kind of behavior. Let's have these so I can draw on the chart again. Kind of here, over the bull market didn't start. As soon as it comes back up, there was actually a little back test there, and that was at $20 or so in October, and we're already 5x up from that. And basically, as soon as that happened, it was just non-stop buying. In the previous market, when you look at the previous cycle, you lost it, kind of flipped and then lost it, and then the second time, and they did it twice again here. Look, lost it, and then the second time, and then this one was a failure. See that? It did the same thing, and then it failed. And so that when it failed, then the next time it was the exit. The first opportunity exit was there on the failure. And so if you're looking to repeat that kind of behavior, then possibly what you're looking for good entries would be something like this. Something like this and something like this. And see, I'm not sure. I'm almost thinking if that's the wave 1, are we in the wave 3 now? I don't know. Or was this the wave 1? And now we're in the wave 3. This was the 2, this is the 3. So this has already happened because that was this. And so we're just waiting for this one now. But based on what you're suggesting, probably the best entry is going to be what I said down here, swing failure to go up. That would be a really good entry. Because that will be like, look, go back to the history. It did the same thing here. Look, see that? Swing failure. Swing failure. And it went up. And it only did the swing failure once. The second time it couldn't make a new low. And the third time it couldn't make a new low. It was just making higher lows. So we haven't actually had a swing failure yet on this up move. I can't see it. There was one here. See that? That was our first swing failure. And then the price just kept on going up. So looking at the previous price action, we had a swing failure here. The price went up. And the second time we couldn't even fail. Swing. Oh yeah, we did. We had a second one here. Look. There. See that? Swing failure. So I think easily the best entry is going to be to see a swing failure. Easily. Because it's clearly shown in a bull market in the previous price action where that is the best entry to get those swing failures. So if you coincide that idea with your super trend idea and just look for the conditions where you are looking for a swing failure. This one happened once here, but mainly here. And then this one happened here. See that? And each time it did that in the bull market, the price really rallied and expanded quite hard. And we've potentially only had one here. See that? We've only had one. In the previous bull market, they were easily the best entries. And I think the next opportunity you get to swing failure a daily low, that will be a really amazing entry. Looking at the previous price action. You may only get one chance. So that's something to consider. So the next potential opportunity will be this harmonic that I have, this ABCD with a long, with a nice swing failure of that low. That was definitely going to be your next big long. Just set an alert. Long SP. So happens, take it. Just do it. Right? You can use the same indicator and change it to 200. Let's have a look at 200. All right. Let's have a look at the previous price action. It's harder with the, I think with the 100 was a lot easier. The 200 is not easy. Unless you just blindly enter on spot. If you were to enter on spot, then the safest entry is easily going to be coming back into this trend. Easily. Without a shadow of a doubt. The safest entry, you could scale in heavy on the back test of this trend. I like that. And you only get one or two opportunities, and it's a really easy trade every single time. It's a really easy trade. You don't really have to think hard to use this indicator. So I'll keep it around. Maybe not, I'll take it off and I'll put it on when I want to use it, or I'll create another template. But yeah, so this is kind of what I'm thinking. Now, again, when I'm contemplating trading, I'm talking about risking 1% max, leverage, position sizing, and all that kind of stuff. I'm not talking about higher time frame investing, because I always have said that the best way to trade this bull market for most people is dollar cost averaging in and trading the cycle, not trading the daily charts or not trading the monthly charts or any of the other charts. It's the easiest way to trade this cycle is to accumulate all the way up to the cycle peak and just keep on buying the dips and just average in. And eventually, once you get crypto on mainstream media and every granny and mother and niece and aunt or whatever talking about crypto, and you can start selling, basically. And that's basically your signal. Once every single person is buying crypto, that will be the signal to start selling your crypto, start scaling out your crypto. That's basically it. And I'm not really contemplating anything different, and I'm not even suggesting anything different for anyone. Yeah, I'm saying that the safest and the easiest strategy for most people is to just keep on buying throughout the course of the bull market, and then looking to exit when Bitcoin is pushing its highs, probably in the 80 to 150 region, and then altcoins are pumping because all of retail has finally caught on with the crypto bull market. All right, that's Solana. Let me have a look at TRVL because I'm doing that. I wanted to have a look at the higher time frame candles because I like to look at those. I'm probably going to use the KuCoin chart actually. Let me see. Phone calls. No, it's fine. I'll just have some chocolate. You're welcome, Cactus. If you have a look at let me compare it actually. I'm going to bring all of the charts together. It's in the weekly. It should be in the weekly. It's the higher time frame. Let me get rid of these fibs now. Gate, Bybit, Max, KuCoin. We're on the same time frame right now, so we're on the monthly time frame. Get them nicely positioned. Just wants to have a look at all the exchanges. Let me get the volume data on. I think volume is quite important. I just want people to see what's happening on the higher time frame. I think it's really important that we have a higher time frame appreciation of what's happening with this token. I mean, people realize how important the higher time frame is, and actually it drives everything. And the reason why I'm looking at all the exchanges is because the volume is spread across 4 different exchanges, and there's not, even though one exchange might have most volume, not one exchange is driving the price right now. It flip-flops between different exchanges. Sometimes you're going to get higher volume on maybe MEXC, and that's driving the price, and sometimes it's going to be on KuCoin, and sometimes it's going to be on Gate.io, and maybe rarely it's going to be on Bybit. And so it's always good to have a look at the different exchanges, because you might form a bias on one exchange and then actually your bias is wrong because the volume is coming elsewhere and your exchange is only following, it's not leading. Okay, so you're not getting the up-to-date information before it already happens. And you're right now on the monthly time frame, what you can clearly see, and this is the higher time frame, so you've got KuCoin here, which launched in December, and then the rest of these exchanges, they launched in November 21. So with the KuCoin price, you don't have the initial exchange launch, which was at 9 cents in these, in Bybit, in Gate, and in MEX. In KuCoin, you had a launch, and then actually what happened was there was an immediate sell-off. Whereas with these other exchanges, you had a launch, there was a little bit of buying frenzy for about 1 or 2 days, and then it sold into that. Okay, and that's why you have these initial big green candles, and then you have the continuation, which is where these candles align in December. So the alignment begins in December, and not KuCoin, but all these other exchanges, they actually started off at a higher price because they were already trading at a higher price before they sold off. And that's why there's a slight difference where these ones have a larger expanding candle to begin with. That's just to explain the price action. So the token launched at the end of the last bull market. So it launched in November, which basically is when Bitcoin peaked in 2021. And naturally, this token has just experienced the wrath of the bear market from day one. Yeah. So in my mind, that's already quite bullish. It's bullish because if this token was weak, it would have flopped within the first few months. If this token was a meme or a scam or some kind of bullshit rug pull or whatever is out there, because of when it launched at the beginning of the end of the last bull market, and it's already endured the whole duration of the bear market, and this is not a small period of time that I'm imagining. We're looking at potentially all the way through to October. We're looking at 23 monthly bars. That's basically 1 year and 11 months, 2 years. It's endured 2 years of bear market, and I think for a coin that hasn't actually expanded in the previous bull market, and so there's something you have to understand about previous tokens. A lot of tokens which already expanded in the previous bull market, what the tokens were able to do were they were able to sell into the expansion of the last Bitcoin bull market, and then they are able to use the capital raised from the expansion in highly elevated prices. They were able to use the capital which they were able to sell into those higher prices to sustain the project through the course of the bear market. Yeah, and that's how a lot of these projects either grow or how a lot of these projects die, and it depends, because if the founders or the people who launched the project or the tokens take their value and they don't put it back in, i.e. that they rug pull the project or they run, then you're going to get a dead project in the bear market. And then those who are willing to put it back in and keep the project going because they're looking for a higher time frame end game and end goal, then those are the ones that are still around now and are starting to pump. This project is very different because it didn't have that opportunity. There were no higher prices in the previous market. Yeah. So even from launch, it priced to the peak. It did go up on Gate. And let's not take Gate. Let's take MEX, because that was the most correct. That's the most volume on the first instance. That only went up about between 10 to the peak. I don't know, probably 12 or something, 13x. And something you have to understand is that a lot of these investors who invested in the first instance, they extracted their value because it was the end of the bull market and they didn't put it back in. They were just looking for a quick flip. It's like flipping property. They were just investing early, flipping their value, and then they were just, that was their payday basically. And unfortunately the timing was not favorable. But I think what's important is that this project has actually not only survived, but it's actually thriving for the duration of this bear market. And that's something to bear in mind. Like, we made an all-time low last year in December 22, and we came back to test it, and now we're coming out of the lows. And that's what I'm seeing now on all of these exchanges. You see how we had the bear market sell off, we had our relief rally, and then we had a sell off to test the low, and now we're coming out of the lows. Yeah, we're finally coming out of the lows. And in the context of Bitcoin and the bull market, it's quite bullish, the kind of behavior that I'm seeing now. The fact that we've coming out of the lows, and all the exchanges are suggesting the same thing. The other thing that I'm seeing that's quite interesting is that increasing buy volume now. So if you look at Bybit down here, you can clearly see that we have, in the last 3 months, the current month being February, we've been having increasing volume. So where the volume here on average is either down here or at the most here, with now in the last 3 months, we've seen significant increase in volume on Bybit. On Gate, it's slightly different, because on Gate we had a little bit of a frenzied volume buying here. But apart from that nuance, if you look at the average, we are kind of trying to increase. There is a little bit of increase here in the lows. There's a little bit of an increase. And on MEX, it's on par with the normal volume. And then on KuCoin, we are now starting to see some kind of potentially an increase. So last month there was a significant increase, and this month we haven't put in as much volume as the last 2 months, but you can see now that the volume is a consistent buy volume. It's a consistent volume. It's something to bear in mind. I think it's quite bullish what I'm seeing now. It's not like so crazy that it's beyond obvious. So that's why I'm kind of pointing it out. Yeah. What happened there? So that's something to like look at. And then the other thing that I'm seeing in the charts is I'm seeing a trend reversal now. And so I've done this quite often in the past. And if I was to like just inverse these charts, just show you the inverse. And like, if this was how the chart was and you were looking to buy this, I'm just thinking to myself, would anyone buy here? Is this where you would buy? Where would you be thinking to buy? And I think it's easier to look at charts when they're inverse, and when now, instead of thinking of selling, you're thinking of where you would buy, because then you can reverse it to the opposite kind of perspective. And so I think most people looking at this would be scared of buying. And if you think this is the inverse, then you can reverse the idea in terms of how this is the inverse. And the reason why is because it looks like it wants to go down. It looks like finally the trend is reversed. You know, this is something to consider. Like I feel like we are reversing this trend, and I said last month that these inverse hammers in the lows were bullish because of the context of these candles being in the lows. They were bullish candles. Inverse hammer, inverse hammer, inverse hammer. These are bullish candles because of the context of these candles being in the low, and because of the volume that's coming in with these candles. And so ever since I spotted these candles back in November, actually, this red candle, the price is already up 100%. 100%. So if you look on my Twitter, you'll see I was identifying these bullish candles, and we're up now. In the context of the wider crypto market, you might say, well, that's nothing because other coins have pumped. But there's a difference here, and the difference is that we're talking about higher time frame market structure at the lows. It's a very different chart to a lot of these other charts which have just launched and are just pumping into price discovery, because we're looking at a project which is a long-term project. It's already survived the bear market without any kind of significant capital raising event apart from the initial launch. Whereas a lot of these other tokens have increased in value 50x, 100x or whatever, and have failed, whatever. Yeah. And so I think that's quite a good signal for most people. When you're looking to invest in this, it's quite a good signal that it survived the bear market, thriving, coming out of the bull market, bear market, coming into the bull market. I think there's a lot of that should give most people confidence. We're coming out of the lows now. We're at major levels of resistance. You can see on the horizontally, all of these exchanges are right now, we're coming against the horizontal resistance level. And the horizontal resistance level is the previous lows and the previous highs of these monthly candles. Okay, we're at that now. We're at that point now on all these exchanges. And that's going to flip. I can't tell you when, but eventually that line will flip into support, and this will then start to rally, and will no longer be in the lows, will be above support, making higher highs. Eventually it's going to happen. Yeah, in the context of this bull market, it's going to happen. So I think this is a really good opportunity for people to have a look at and kind of really look at it, give this like a higher time frame view on this project. Go and do your research, go and have a look at the website, go and look at the fundamentals. I've made a crap load of videos. Have a look at my videos, and if you have any questions, I'm happy to answer them in Telegram or in the comments or wherever, really. So I'm kind of like really, I'm looking at this and I'm going, despite this increase in value over the last few weeks, I'm still really mega bullish on this. Like when I'm looking at this, even though we're into resistance now, I'm not feeling bearish. I'm thinking actually it looks like we might be on the point where we could break up. It's possible. It's looking like it could happen, and we're just waiting for that moment where we do suddenly get an increased injection of volume, and where the price does eventually break up. Okay. So I think has anyone got any questions about what I'm saying? Good morning, B. And B is absolutely correct. TRVL is still underneath the radar. I think a lot of people don't really I think the problem is this: there's a lot of hype, and people are attracted to pumps. But I think eventually what will happen is once Dtravel launches some of their really highly visible front-facing products, i.e. Sensei and some other things, then it's going to capture people's imagination because of the application being a peer-to-peer application, which is being used now, like in a real world use case, which has a real world application. And in my imagination, what I'm thinking of, because Dtravel is a DAO, and because the application is a decentralized application, peer-to-peer, which has a real world use case, which works and has a real need too. And that's what people don't realize. Like, this isn't an application where we hope that people will use. It's an application that we know people are looking to use and are using now. And more people are getting interested in it, just simply because a large portion of the world who are Airbnb or booking or what, a VRBO, are tired of the fees. There's quite a large amount of fees in using these centralized platforms, and the great thing about a decentralized application is that it's significantly cheaper, and you have all the other benefits too, which comes with a Web3 application. But I think because we've survived the bear market, and because now we're coming into a new cycle of a bull market, I honestly think that it's very unlikely in the future when so let me just go back to one chart now so it's a lot clearer. So I'm back on Ku. I think it's very likely in the future, and this is the KuCoin chart, so it's, the all-time high is much higher, but eventually if this price does make a high, I think it's very unlikely that we'll go back down to the all-time low. I mean, that's very unlikely. Yeah, I think that's very, very unlikely, especially because you're talking about a really small market cap. Like if this token has survived the bear market with being such a small micro cap, without the crazy expansion that most tokens had to raise a large treasury in the previous bull market, and if this token manages to get to an all-time high where the treasury can extract some value, and also where people like myself or others like yourselves listening, you do take some profit into the highs, and we do make an all-time high, it's very likely that me and others and the same people will be looking to put that value back in a future bear market and defend the price as the price, if the price retraces to form a higher low. And so in my mind, I'm thinking that obviously it depends on how high we are able to get in this bull market. I don't think we're not going to make an all-time high. I don't know how far we're going to extend yet. I'm very confident that we will make an all-time high. And so that's why I'm not looking to take profit in the lows. I'm looking to take profit in the highs. I think the run will become later as the momentum builds. But then I also think that when we do make an all-time high in the next bear market, people like myself will be looking to reaccumulate. Yeah. And I don't know how high it's going to go. No one can predict that. But then it'll be easy to find areas of reaccumulation, and it'll be easy to defend the lows, because the people who have extracted value at the highs, which is going to happen with most tokens in the next bear market, a lot of people will be looking to pick up the token at the lows. That's just going to be normal behavior. Yeah, I can't imagine if we do go up to 2, 3, 4, 5, however high, no one can predict this. I'm thinking if I was looking at the MEX chart, which has the correct fib extension levels, I still have in my mind, just not even looking at anything else, just looking at fibs, I am thinking $5.1 and 9. I am thinking that. I'm not like, I think those are within reach personally. And the main reason why I think that, because when you're in price discovery, there's pretty much no volume and the price moves very fast. And also people get really bullish in price discovery. And the reason why people get bullish is because you're making a higher high. People like higher highs. Yeah. And people will look at this chart and they'll go, wait a minute, we've just made a higher high. And they'll be thinking to themselves, higher prices. That's what people do. They get really bullish in the highs. So I don't think it's out of the question for us to extend at the very least to between $5 and $9. And then my point is this, that if you're at the lows now and you extend to $5, that's 100x. 100x. Yeah. And then if we do get a pullback and we've made a higher high and you get a pullback in the next bear market, yeah, be easy to reaccumulate. Be easy to reaccumulate and hold the price up. And then you'll be looking at the next bull market. Yeah. And the thing about this project is that it's not like a centralized application run by the DAO. I'm not employed by Dtravel. I've never received any payments from Dtravel at all. I'm just an Airbnb superhost, been doing Airbnb for over 10 years. And I've seen this application change my business in the real world. And that's why I'm so excited about this, because I see this application as a forever application now. Of course, in the future, it has to become even more decentralized to the point where all the code and everything is decentralized. It's just out there. And so there's no like central entity. It's just the whole thing is decentralized. Yeah. And that's a transition, and that's going to come with future technologies and the Web3 idea evolving and becoming true Web3 down the line. We're in a transition stage between Web2 ideas and Web3 ideas. In the future, you're going to have DAOs potentially run major aspects of the world effectively. They're the future companies of the future, DAOs. Yeah, especially when they're decentralized applications where you launch them into the cyberspace and they just work and they just function. That's what I see with this. I see this as a long hold. And I think down the line, the tokenomics will become more and more important, but much more important is the idea of distribution and reaccumulation, because you want people to sell into the highs and then buy back into the lows. And I think people will do that once they see the application growing, more interest picking up, the business side of it growing and developing as well. But anyway, that's kind of what I'm thinking about higher time frame for this. I think it's a really great place to buy, actually. When I look at these higher time frame candles, this is the third bullish month in a row. Yeah, I can't imagine us making a red candle this month. We're still basically at the lows. You're buying now the same price as October 22. Yeah. And eventually this key level, which is the launch price, will flip as support, and then that will be the floor. The floor will be made. Now, I can't predict how this is going to happen. I can't predict if we go up and then down one more time. But whatever we do, it's going to look bullish when we break out. Yeah. Whether we break out now or in the future, it doesn't really matter, because if we were to break out now, then we've completed an Adam and Eve bottoming pattern. yeah, which I have here. I'll show you. We break out now. We've completed an Adam and Eve bottom pattern. Yeah. With the neckline being 9 cents effectively, or maybe a little bit higher because you have to make a higher high. Okay. So maybe a little bit higher. So effectively that's your Adam and Eve pattern. Breakout, back test, and expansion. So this is going to be, why does this do this? I have no idea. It's so annoying. My computer's gone berserk. Sorry. Oh my God. I'm having a nightmare. Sorry about that. I'm just trying to delete some brush stroke. I usually do undo and it doesn't. And then the other thing is if we don't break out and for whatever reason this neckline doesn't give way. Now it's quite subjective where it is, but let's just say it's an area and we come up to find resistance, then you're potentially looking at a higher time frame inverse head and shoulders, which is also crazy bullish. Like we're looking at bullish, but a bullish bottoming pattern right now. Now I can't tell you if we're looking at an inverse head and shoulders, if we're looking at an Adam and Eve, or if we're looking at a Wyckoff accumulation as well, which is what I'm schematic, which is what I've been drawing out, and I've kind of marked it off. The thing about Wyckoff is that it's never going to be an exact copy of the Wyckoff schematic. The Wyckoff schematic is an idea, but every accumulation in every token is different. It's never going to be 100% exact. Never. It's like, it's not reasonable to ask to say, well, it's not 100% exact and therefore I'm not going to trade it. That's stupid because it just never is. It's never going to be exactly this. You know, it's like harmonics. Harmonics never have exactly the perfect proportions, but they still play out. And so I'm not looking at this and going, well, this is exact. Because it's not exact, I'm not going to trade it. I'm actually looking at this, and what it will do is it will give me more confidence as we go up. If we start forming this SOS, trust me, I'm going to be posting this everywhere, and then people are going to go, oh my God, he's been posting this for months and we didn't trade it, and hopefully we can get a lot of FOMO at the top. That's the plan. That's my secret agenda. So this is quite, I think this is quite interesting. So let's just keep an eye on this and see what happens. But my initial bias, my real bias isn't coming from these ideas. My bias, my true bias is coming from the candlesticks. Yeah, my real bias is the candle patterns and the candlesticks. Yeah. And so if you look at the last 3 months, this inverse, I mean, it's got a wick at the bottom, so potentially you could say it's not a hammer. What would that candle pattern be? Let me just do it. Have a look to get the correct name, because I don't want to get people criticize me for using the wrong names, because there are people out there who like to criticize. It's called a gravestone doji, potentially. Well, actually, no, because it's not a gravestone because it's got a body. So it's not even a gravestone. That's the problem, isn't it? I think it's a hammer. I think it's an inverse hammer. But if I say inverse hammer, someone's going to criticize me and say you don't know what you're doing. You're making this up. And I am actually making this up. That's the funny thing. It's all made up, but it's made up based on my ideas of what I've learned and I've experienced and what I'm seeing. I don't know if it's a gravestone doji. It's not a gravestone doji. That'd be a gravestone doji. Anyway, for me, that's an inverse hammer. You got a wick. You shouldn't really have a wick, okay? But whatever. And I think these are bullish. When you get these inverse kind of hammer style candles with long wicks on the top, they're really bullish in the lows, really bullish candles, yeah? And when you have the volume to back those candles, I'm seeing bullish candles in the lows, yeah? And then in my stream in December, I said very clearly, I'm not going to link it, but I said this candle here, this red one here, this 6-month candle was a really bullish candle. And the reason why it's a bullish candle is because it closed above 50% of the previous candle body, of the body. Yeah, that's why it was a bullish candle. I think any candle that closed above the bottom of the candle would have been a bullish candle, but this is significantly more bullish because it closed above the 50%. If this was a bearish red candle, the close would have happened at the bottom here or maybe even lower. Yeah. And what it's basically, oh, it does it again, huh? My undo isn't working. So annoying. Delete like this. Yeah, so, and then if you look at the previous 6 months, you also have this inverse hammer in the lows. That's a bullish candle too. The fact that that candle printed on the 1st of January 23 and the next 6 months and then the next, which we're in now, the next 6 months, we're just ranging inside of that previous candle is bullish consolidation after you've printed a bullish candle. Yeah. And so my bias is coming from candles. When I look at the 12-month candle, again, I'm seeing an inverse hammer at the lows. That's a bullish candle in the lows. Look at the volume on that 12-month candle. It's crazy volume in comparison to the rest of the range. So I'm seeing a really strong bullish candle formation in the lows of these candle structures that are forming. And every time frame is giving me that same vibe. Every time frame is basically saying the same thing. Like, look, this is the 2-month time frame, and I look at every time frame. I look at literally every time frame. I'm seeing the 2-month hasn't closed yet, but we're already above. We're trading above a significant 2-month kind of dividing line. Yeah. Can't undo. It's annoying. Let me try something else. Let me refresh this. Just going to go to NASDAQ and refresh it. Never mind. Let me just refresh this because I'm getting really frustrated. Work. Right, let me see if I can draw something and undo it. Oh, it's gone to red. Huh? It's weird, huh? It just went to red. It was on yellow and it went to red. Got zombies in my training view. Yeah, it's working now. Thank God for that. So annoying. All right. So that's something to like think about when you're. I think this is a good. It's still good. Like, it's all really good. Every time frame is basically telling me the same thing. If you look at the 4-month time frame, again, you have this bullish reversal pattern here, and then you're having a followed by another bullish reversal pattern. So you're basically getting bullish reversals. This whole structure on the 4-month candle structure is bullish reversal. One bullish reversal followed by another bullish reversal. So, and the great thing about these structures is that these are higher time frame structures that we're forming in the lows. In the future, this whole thing is going to be a really strong support if in the future the price was to come back down. It'd be really strong support. So as long as we're making a higher high in this bull market, and that's just to get above $1.56, then we're looking at higher time frame bullish continuation for a higher low. If the price in the future was to get back to the current price, it'd be easy to defend that low, because you'll be basically going from potentially a 400 to million market cap to 1 billion billion dollar market cap, all the way back down to potentially a 14 million. It'd be very easy to defend this token in the lows, very easy, if we make a higher high. So I'm really bullish on TRVL, but fundamentally it's because of the candles. The candles are giving me all the information. Yeah, that's why I'm really bullish. Everything else is just like to give people, it's fun, you know, it's just fun to see what's happening and to comment on the price action. And best strategy for accumulation is dollar cost averaging. I think it's good to create, everyone has to create their own ideas of how they're gonna buy and sell. No one is absolutely correct. No one knows the answer, has the answer. Everyone has to do it based on their own ideas, their own risk appetite, their own portfolios, etc., whatever. And everyone is different. But what I'm saying is that it's quite good to buy red candles, like what I'm seeing in the way the price is forming at the lows. If you buy red candles, you're always going to get good entries, because you're always catching the lows. And if you're averaging in, anyone who's been averaging in red candles basically is going to probably be in profit now. Ever since October is going to be in profit. Yeah. And you're not going to worry about the swings, because you'll see every dip as an opportunity to buy if you're buying red candles. Now, the other thing that I would say, and this trend indicator is looking quite good on this token, this super trend with the EMA. I think I've got it on 200. Let me put it on 100 to have a look. So this is the super trend indicator. Potentially now we've changed the trend for the duration of the bull market. But this could be it. This could be the bottom of the trend. This could be the beginning of the trend. Let me put it on 200, which is what Cactus suggested. So yeah, you see, look, I've never used this indicator, but when you look at the downtrend, you see how it did signify a trend, you know. So I don't know. Maybe now we're going to see the same thing, but for the uptrend. Another good way to enter is the moving averages. I like to use the moving average 50. And obviously the higher the time frame, the better the entry. And you'll notice that on all the time frames, that see on the 3-day chart, you see how it resisted. It kind of almost resisted, apart from this relief rally. On the back test, it resisted and held support, lost it, and then resisted here. And then finally we're above it. You know, it kind of went above, came under, resisted, came above, back tested, and now we're above it. So I see these bigger time frame moving averages, these 50 moving averages. It looks like it's playing a role. I don't usually trade these moving averages, but I think if you were looking for a good opportunity to buy the dip and you're patient, then I would always say that the 50 moving average is a good one. Especially if we start trending now. And if we start trending, then the price will start staying above it, and the 50 will start following, and it will start getting steeper and steeper and steeper. And that's kind of what we want. We kind of want that to happen. Any questions on TRVL? I think. So we're going to have, just so that you guys realize, and I just want to give you guys a heads up, there's going to be resistance at the yearly level. Yeah. Just bear that in mind. Like, I don't want people to think that it's just because I'm bullish, I don't think there's going to be resistance on the way up. Yeah. So the yearly level will offer resistance, and that's at 2.85 cents. And usually you'll find these higher time frame wicks will also offer resistance. Okay. So you have one at 5.2 and one at the all-time high. And I don't know, like you could break it down and go to lower time frames to see where these, yeah, you got, that might be the big resistance at 2.8. It may be slightly lower because of the nuances between these charts, which I've talked about in the past. But that, I think that level is very similar on all the charts. I think that's going to be a big level, and then also that does correspond to the golden pocket. You see that? So that level that I have in mind, which is the yearly level, corresponds perfectly to the 618 of the full extension retracement from the all-time high on MEX C all the way down to the all-time low. Yeah, that's big resistance. Let's just bear that in mind. Now, I wouldn't mind, I don't like the idea of just going up and down. I wouldn't mind an impulsive rally to the golden pocket. I would really love to see that, just to give people a little bit of time to take their profit, you know. Otherwise, some people are asleep and they miss it. It'd be nice to get some kind of rally up. And then we've made a higher high on the weekly time frame, which is taking out this high. If we do manage to push up into the golden pocket, then the next thing that I'll be looking for is where the price corrects to find support. That's kind of then what you're looking for. You're looking for the price to correct, to find support. Now, usually these corrections are going to be some sort of ABC correction, usually. If you're looking at an impulsive wave, which could potentially take us to the golden pocket, I don't know exactly where it's going to take us. It could be just up to the 50%. It could be to the golden pocket. It could be lower. We just have to see how the price behaves into those levels. But I think a big level is going to be the golden pocket at 29 cents, because that's also a yearly level as well. And then you'd be looking for some kind of ABC consolidation correction coming out of that level. That's kind of what I'm imagining. And so we'll be looking at potentially, I don't know how it's going to behave, but some kind of ABC like that. And two things to bear in mind about these corrections. Deep corrections are bullish. Extended long corrections are bullish. They're both bullish. Yeah. If you have a correction that's going to now last 6 months, that's a bullish correction. That's not a bearish. It's not bearish just because it's taking a long time. And if you get a deep correction, if something we all from 30 cents, we go all the way back down to test this 236 at 5 cents, that's bullish. And the reason why that's bullish is because anyone who's captured profit at 30 cents will be looking to put all of their value back in at 5 cents. That's why it's bullish. You've got to bear that in mind. Yeah. People aren't going to be taking profits in the first impulsive move up and not be looking to reaccumulate after the price has found support at lower levels. Why? Because we're not at the end of the cycle. We're still at the beginning of the cycle. We're still you know, we've just turned the trends, and we're now looking at an uptrend. And in an uptrend, people will be looking to buy the dips. So actually, then it will depend on how aggressive or how bullish people are as to whether they let the price get lower. And then the lower it gets, the more aggressive people will be in buying, especially if they've been able to take good profit at the higher of this expansion. Yeah. And so you have to be thinking about that, because if someone suddenly takes a lot of profit at 30 cents, they'll be looking to put all of that, maybe not all, but a lot of that back in, because then it would be like they've doubled their TRVL portfolio. And the people that will be selling will be the ones taking profit, but you're also going to get some people who come in late, who don't really understand how the markets are going to behave. They'll come and buy late. They won't have a trade plan. And those are the people that are going to sell. The people who are trying to just catch the rallies, and they always come late. The late longs always get punished. And so they're the other types of people that are going to be selling. But as long as enough of us who are accumulating at the lows are willing to take profit into those higher levels, and if we're willing to allow the price to come back, and are willing for us to put the value back in to defend the lows, then we can nicely form some kind of consolidation. I don't know how it's going to form. If we are looking at if we go up all the way up to 30 cents, then potentially we are looking at an Adam and Eve, and then it could come back to test the neckline. Yeah. And then if we are forming a Wyckoff schematic, then it potentially could be even more bullish, because instead of coming back, you'll now be, and this could be a little bit higher, consolidating underneath the golden pocket. So we'll see how the price reacts off the golden pocket, really. Because if you go up and you start consolidating underneath the golden pocket in an extended period like that, that's ultra bullish. That's like a flag consolidating underneath resistance. That's like the most bullish scenario will be some sort of higher time frame flag or pennant underneath a big resistance level. If we correct much deeper, like an ABC, still bullish, but it just means we'll have different targets for the next move up. So in terms of future bullishness, and it will all depend on sentiment and supply and demand. It will all depend on people taking profits. Do they quickly put their money back in because they don't want to, they're happy with taking at 30 and putting back in at 17? Or do they wait longer because they're looking for lower, it's all psychological behavior when it comes to buying and selling. But an Adam and Eve correction could come back to retest the neckline somewhere here. Like it's probably a little bit of an area, and somewhere maybe even as far down as 9 cents. A more bullish Wyckoff schematic correction is going to be basically a really strong flat correction consolidating underneath a major resistance level. Actually, I said this was the most bullish. That's not true. The most bullish scenario. So we're just contemplating bullish scenarios now. The most bullish scenario. I'll just get rid of this again. Is going to be to get straight above the golden pocket and to consolidate above it. That's the most bullish scenario. Yeah. And actually we saw that with Solana, because when I was looking at Solana earlier, on the higher time frame, you can see that Solana has done that. See that? So Solana has managed to get above in the first in this impulse, has managed to get above the golden pocket, and now you're actually consolidating above the golden pocket underneath the 786. This is more bullish. This is probably the most bullish of all of the scenarios, simply because the golden pocket, which should have acted as resistance, didn't hold. There was too much demand. There was too much demand. All right, any questions about TRVL? Oh, hold on, someone's at the door. I'll be right back. I'll be 2 minutes. Okay, I'm back. Sorry about that, guys. It's nice to see a few people watching. Thanks for joining. If you like any of these videos, just a nice like would be very helpful. Thank you. Let me have a look at quotes. Haven't looked at it in a few days. Just because B has asked. I don't know if I'm gonna. Oh, FET. I was gonna do FET. I saw that it pumped, huh? I saw some things on Twitter. There's Quanks. Should be here. I've still got a lot of rubbish on my charts. Let me just get rid of this stuff now. Get rid of these. Get rid of that. Get rid of this. Okay, interesting. Excuse me. So it's come back above the value area low. It's come back above the point of control. It's just consolidating here, back above this white line that I had marked. You see this previous low? See that? So it's nicely holding that as support. That's kind of what you want to see. So we're kind of ranging now in the bottom of this range. That's good. That's kind of what you want to see now. You want to see that. The point of control is still there. It looks like the point of control is holding a support now, but it's quite a messy range in this low, in these lows. Yeah. So just because I have an idea for the price to go down doesn't mean it's going to go down. And when people think like this guy's crazy, why has he got this idea? It doesn't mean that. Just because I drew it doesn't mean that I think it's going to go down. I don't think anything. I think it could go up or down. I don't know. But the point is that if it goes down, then if it does behave like this, then they'll be looking to buy it. Like I predict a potential future, and if it happens, then it will give me confidence to buy it. That's all. But this doesn't have to happen just because it hasn't gone down. Is it going up? I have no idea. I still think we're I don't know if it's ready yet. I can't tell you. It's kind of what you want to see though. You want to see interest. Let me just put this all down. What's that long trade? So yeah, another idea when it goes down there. Just put all of this into my, keep that. Get rid of this. And this is fixed range. Keep that. Start retracement. Right. So got less data. We have a look at the volume on this range. So the value area low has gone down. You see that? That's good. And the point of control is now in the lows. This is what I said. I said, if you remember my previous videos, that's what you want to see. You want to see the point of control to flip from the highs into the lows. That's bullish. Yeah. And this has come down a little bit as well. That's why you level these, mark these off so you can see the change. So this was the previous volume levels of interest, the value area high, the point of control, and the value area low. And so with this last bit of consolidation in the lows, when I extend my volume pool from where it was, so where was it? It was somewhere here. See? The point of control wasn't high. So this last bit of volume has changed the volume area. And now the point of control is here. The value area is lower. And the value area high is now the previous, basically the previous point of control. So the volume area has shifted. This is what you want to see. You want to see that kind of behavior. I just got an alert on Bitcoin, so I'm just going to quickly have a look. Hold on a second. Oh, some shorting in the lows. Hold on. I'm just going to flip to Bitcoin because I've got a potentially a trade on. Oh, look at that. So that's your see how far it went down actually. It's a bit earlier. Shit. Didn't want it to happen so soon. Let's get rid of this stuff. So that's there. Don't know if I like that. I'm looking at the order flow. There's some shorts coming in. It's a bit of shorting at the lows. I haven't taken the trade, but that's your SFP basically. It happens so fast. See that? It happens so fast. Look at the 1 hour chart. You're meant to take the trade as the price comes up, and that's your invalidation. So there are some people in longs now. And they'll be in profit, but they'll be looking to take their profit. I can't see an invalidation bubble on, sorry, a liquidation bubble on XO charts, actually. So low CBD. Any longs coming in? Yeah, there's some, see that? There's some longing here, 1.8 million. what you want is you want these shorts to get trapped. Yeah, probably you could probably we've just missed it. It happens so fast. It's so hard. You have to be on it. You basically missed the trade. We all missed the trade. I don't know if anyone took it. That was fast. It's the problem. I was streaming and I wasn't really trading that. It's already up 0.686%. I'm not worried. I think it could probably come back down again. It happens so fast. I kind of want it here. All right, forget about this. I'll think about it later. So you go back to quants. I'll have to cut that out. Yeah, so the volume area has moved lower, and that's good. That's kind of what you want to see. You want to see that. And so what you now what you don't want to see. So look, what you want to see has happened. And now you really don't want to see us lose this range now. Like, you don't really want the price to go down now. Okay. I don't think that would be healthy for the price. Like, now that you're putting volume in at these lows of this range, this must continue. And as long as it doesn't go lower and start forming resistance of this previous range, then you're good. Then this could be then this could be quite good. Yeah, as long as this is not like gonna form resistance because the price goes down, but because the point of control is now flipped to the lows, you have confidence to start accumulating on support. The point of control needs to hold now as support, which it is. Look, it's already, you can already see that there's a little bit of support offered here on the 4-hour time frame. See that? So as long as it holds a support, then maybe you can make your way up. You start making your way up. It's kind of what you want to see. You want to start seeing the price move up into the value area high, and then you have to see what happens. Doesn't really correspond with any kind of significant fib level. Yeah. Let me have a look at the higher time frame candles. Just get rid of this now. Which range? Get rid of that now. So you can still see that we're underneath this higher time frame from this pivot to this high. We're back under, we're under this, like this 382, and we're kind of in between this 50% and this 382. We're kind of there at the moment. We do have a little bit of a channel as well. Yeah. still think there's time. Like, I don't know if it's ready to go up. Yeah. I think this month has to form. This month candles like it's like a doji in the lows. And then next month we'll know whether it goes up or down. I think if it goes up, it'll be, that's what you want to see. You want to see the next month go up and form a monthly green candle back in that highs to reverse, to kind of reverse this whole thing. It's kind of what you want to see on the monthly time frame. If you're looking at candles and you want this whole thing to start forming a reversal on the higher time frame. And actually this is quite good because you had this, is that the gate launch? It's kind of holding as support here. It was kind of holding as resistance here. It was holding as support here and here now. So I think if this month holds here, then the next month you're looking for the reversal. So you want the price to go up. And that will give people a lot of confidence if next month the price went up. And also if this month the price closes green like it is potentially next week, you're basically effectively you're creating a new level here we call the monthly level potentially. I'm not saying it's going to happen because it has to close green, and then you have a new monthly liquidity level here. That'll be quite a strong level, and so you could potentially, and also you'll how many more days on this week? We've only got 5 days on this week. So in 5 days time, if you close with a green weekly candle here, then you're also creating some sort of weekly level at exactly the same place. So there's a very, very strong level being formed potentially now at this price here at 2 cents. And the next month, if you get like a back test to go up, that would be really nice. Next month. The value area low is lower, but look, the point of control is in would be in exactly the same place of this range. So you have, assuming that this in the next 5 days, the weekly and the monthly closes with this as a green monthly and weekly candle, then you're going to have really strong confluence here. Okay, now that will be an amazing place to enter then for a long, and you'll have a really easy invalidation, because then your invalidation will be lows here. That's kind of what you're looking for, and then you target as high as you want, but you would be looking to take profit at the value area high. That would be the kind of trades you'd be looking for, and your entry would be a back test into the liquidity level, that new level that was formed, the monthly and the weekly level. That's kind of what you'd be looking for. You may not get it because in crypto people like to get really bullish and like to front run the future. Who knows how that will pan out. And if that doesn't pan out the way you wanted, then what you can do is, once this weekly candle forms, so what day are we today? We are it's Wednesday. So by Sunday we're going to have the weekly candle, and then we're going to have the monthly candle. So if this weekly is green, the monthly closes, that's green, then what you can do is you can look for a pullback on the monthly candle, and you can ladder in at the 50% mark. all the way down to the bottom of the candle. That's kind of what I would try to do. It'd be the same thing on the weekly candle. You'd be trying to ladder in all the way down to the bottom of the candle, and then you'll be hoping for the price to come back down, to react, and then continuation. That's what you want. You want to see that, and then you don't really want these lows now to be taken, and that will be good because then you'll be forming a higher low. That's kind of, that would be bullish, forming a higher low. If that doesn't pan out, you could get invalidated. It'd be weird because if you get invalidated, you'd be going through 2 liquidity levels and a point of control and the value area low. But for some reason it could happen. Anything can happen in trading, in the markets. And if you do get stopped out for some reason, then the next entry would be the swing failure of these lows to go back up. Be like a fake out, just to clear the liquidity one more time from these lows, get people bearish, just to buy up back into the range, and you're off to the races. But then you would be invalidated too. The minute you see the swing failure, you just have to get back in, and then you'd have to have a second attempt at it, but you have a much smaller invalidation then. Yeah, so you're looking, I don't know if that will happen, because if we close green on the weekly and the monthly, you got on the point of control into the value area low of this range, you've got pretty strong levels there. So it would be really weird for it to then suddenly drop. So this is actually looking a lot better than it was a few days ago, and there was no real rush. Like, that's what I was saying before. You don't need to rush in. I wasn't looking to rush into catching a falling knife or to catch bearish price action, because even if I was to enter now from maybe the absolute low, wherever it was, it's only 11% high. It's not a big deal, you know, like in the scale of things. I feel safer now if I was to enter, simply because of the levels now, the way the price is formed, the volume is formed. Now I know now that even if the price goes down now, I'll be buying onto resistance, whereas before I wasn't doing that. I wouldn't have been buying into, buying into support. Before I wasn't buying into support. Before I was thinking about maybe not reclaiming the value area lower and the price falling down. Yeah. And so that's what you're waiting to see. You're just waiting to see what the market sentiment is like. Are people still bullish, or are people now overly bearish and looking to exit because the price isn't behaving the way they had hoped? I don't think it's a good idea to hope. It's a good idea to just see what's happening and then just trade the price action, right? And then David says, I took that SFP. Well, next time you do the stream and I'll trade. How annoying. I'm distracted. Oh, look at that. You must have taken profit as well by now. All right. So I'm still I'm still going to take the SFP, but I'll take this one now. It was a bit earlier. It was really early. I want it to go lower. I want it to go down here into this. I want us to get really bearish and come lower. As long as you're taking profit, David, it's all good. Do another one. Right, so I don't know why I didn't get an alert up. Right. All right, that was Quants. I hope that helped. B. Sorry, I'm kind of distracted. It's not easy to trade and analyze at the same time. TRVL is looking really resilient. There was a lot of in yesterday's price action, there was a lot of buying, crazy amount of buying. If anyone noticed what was happening yesterday, I was just looking at it, and it was like market buy on all the exchanges. I was looking at TRVL. It's like, look at these market buys on MEX. Market buy, market buy, market buy, all these market buys. So eventually what's happening is that you're losing liquidity in the highs. So eventually it will be easier to go up. Eventually that's what's happening. And that's kind of what you want to see. You want to see market buying, taking liquidity for the price to still hold the higher range. And eventually it will just continue. Eventually it will happen. And when I was looking at yesterday's daily candle, although today we'd had a little bit of a pullback, the volume on Gate was almost 1 million. On MEX it was almost 1 million. On KuCoin it was over just 1 million. And on Bybit we had almost 1 million. Bybit, there was a lot of volume yesterday. Almost 1 million, like 831,000. So Bybit's actually putting in a lot of volume recently in comparison. The BTC chart is looking okay. All right, and then you wanted me to have a look at FET. I don't know. Fetch, of course, Fetch. I was looking at it. So Fetch is some sort of AI, I think. I don't really know much about this token. Yeah, it launched a long time ago. All-time high is 1.17. I don't know why this doesn't show it. 1.17. Basically coming up to the all-time high now. The all-time low is 00817. It's the all-time low. B is saying goodbye. Have a good day. Right. We're about to hit the all-time high. That would be a major take profit. So just bear that in mind. Do a fib extension. And these are your targets. Your next target above the all-time high is 2.8, then 4.3, then 8.2, and then 27. just bear in mind that from the all-time high, or from the all-time low to the current price, it's already up 119x. Yeah. From the bear market low to the current price, bear market low was put in last year in November, to the current price, we're already up 17x. So there's a lot of people sitting in heavy profits right now, and I don't expect the all-time high to not act as resistance. I just think that'll be weird to just expect the price to just do this, right? So if you are in fetch, you're coming into higher time frame resistance now. And the resistance that I'm contemplating is the price range. Yeah, until you get into a situation when you flip the all-time high into support for continuation, you have to assume that the all-time high is resistance. And so naturally, it will be a good place to take profit, okay, and see what happens. And it'll be very easy to put the value back in. If you're still bullish and it goes up and it comes back down, then you'd expect it to hold the support to go up. You're not really losing anything if you're still bullish, and it does do that. But if it does now go into all-time high and reject, you've taken profit, then you're laughing. And so just bear that in mind. I think it's important to take profit when you come back into a significant level like the all-time high. We haven't gone above it yet. So if you're looking for an absolute perfect entry, I mean, we're so close that you can easily skim profits now. But if you're waiting for confirmation, then some sort of swing failure is your confirmation. Just take profits in swing failures. Off the all-time high, you would take profits. The other thing you could look for is a failed auction, or it could just range here for a while and just mess everyone up and still go down, or it could do anything. It could go up, who knows, but it's a good place. So you're not expecting, the point is, you're not expecting the price to just do that. You're expecting the price to do something which gives you some time to think about what you're going to do next. So it is a good place to take profit at the all-time high. Don't think that for whatever reason, this is you're ultra bullish on this project, this is the best project since ever, that for some reason the price is just going to ignore the all-time high. It's a major take profit area for most people, the all-time high, major. And just have a look and see if we're making any kind of, yeah, we got slight, very slight bearish divergences in the high, nothing to write home about, but there is slight bearish divergences on the MACD. You see it's a lower high and you're about to make a higher high there, so there's a bit of it's slightly bearish on the higher time frame. So that doesn't mean it's going to go to zero. It just means that if it was to go up and pull back, I wouldn't be surprised. Right? You can see, but I mean, it's only very slightly bearish. It's not crazy bearish. So, the great thing about the all-time high is that you're potentially in price discovery. Anything above the all-time high is price discovery. But what you need is the price to go up, fall back, and hold the all-time high as support. You need that to happen. Once you've confirmed support with some kind of back test, then the next move can be quite fast, can be quite aggressive, because you're into price discovery, and then before you know it, you're at your extended targets. And then without doing any more analysis, I can quickly and easily see that there was some sort of 5 waves here. 1, 2, 3, 4, 5. That was your 1. then you had your kind of correction that took us down to here, and now we're on our higher time frame 3. That was your 1 to there, that was your 2, and now we're in our 3. Yeah, and I wouldn't honestly, I wouldn't be surprised if this continues. I wouldn't be surprised if this continues and does something like that at the very least. I wouldn't be surprised, because it looks like we're in the wave 3 of 3. This is the whole arm is 3, and this is the wave 3 of the 3, which is usually the most expansive and the most bullish. And then the other thing to bear in mind is that, let me just have a look. So from this, if I do a trend based here, this got to the 1, it did a 1-to-1 to the 3. So if you were to do a 1-to-1, that's putting you up to $2. So I wouldn't be surprised actually if we go up to this extended target of 2.8. I wouldn't be surprised if that happened. And also, if you do an exact fib extension, we're into resistance now, just bear that in mind. We're clearly into resistance, so you could take profit, but I can't tell you that the price isn't going up to 2.8, 3.6. Like there's a few levels here that it could hit. Before, if you did a trend based fib from there to there to there, it didn't get to the 1. So because the 3 was shorter than the 1, the 5 was therefore shorter than the 3. So if this doesn't get to the 1 now, and it repeats the same behavior, then you're looking at something more like this. If this is what I'm drawing now is a repeat of previous behavior. Potentially. All right. And so you don't actually get to the 1, and what actually happens is you go up, you have a failed auction, you come back down, and then you're looking for a 4 correction, and the 4 correction in the past was quite bullish, because it didn't came back to the 50%. So if you have a similar correction, if it goes up to there, for example, 50%, yeah, you're coming back to there for potentially a 4. How does that correct? Extension. It wasn't that crazy. It wasn't crazy strong. It just went to take the highs. I must say though that we're a little bit early. So because we're a little bit early, I'm actually thinking that this wave 3 probably has the potential to extend much further. Yeah. So even though that behavior might repeat in the past, if what I just showed you, I think it is also possible that we have different behavior this time, where we have a little bit more bullish behavior, just simply because this was quite bullish quite early. So from November last year to August to now, it was quite early in the cycle. And so because it's been bullish quite early in the cycle, I am thinking possibly that we might get a little bit more expansive move this time round. So this would be ideal, going up to like $2.8, coming back to the all-time high for a correction for a fifth wave, a fifth extension, possibly to something like 8, or who knows, something like that. And obviously if the 3 is bigger than the 1, then this 5 can be whatever. And so that's kind of interesting. Right. It's kind of what I'm thinking about fetch. A little range pool, yeah, we're above all the volume, so that was the main thing. All right, I think that's it for today. Thanks for watching, guys. I really appreciate you. If you like this video, just chuck a like. That'll be very useful. Just gonna quickly have a look at Bitcoin. God, I missed that SFP. How annoying. I had it planned as well. All right, next time, next trade. See ya guys.